data from the National Pensions Commission shows that Nigeria's total pension funds assets grew by 1.5 trillion naira to 15 trillion naira in 2022, with RSA memberships reaching almost 10 million. Oguche Aguda, the CEO of the Pension Funds Operators Association of Nigeria, joins us now to give some perspective on how pension funds are likely to invest in 2023. Oguche, it's a pleasure to have you on the show. And maybe I can put you on the hot seat and just get your perspective on what all these conversations about Moody's downgrade could influence the local investors' activity. How concerned would you say pension fund managers are about local debt? Because as you know, well over 60% of pension fund assets are invested in local debt.
Yes, so of course, because you know that we are very short on offshore investments, offshore markets, so perhaps not as concerned, but well, of course, some concern, like a previous speaker had said, the investment universe and the individuals investing in the local market versus offshore market are a bit different. So there's some concern, but not overly concerned. We still are long with federal government of Nigeria debt, local currency debt, right. And I think that will continue in the short term, and perhaps even in the long term. So that's where the industry is at the moment. Some concern, but not overly. We operate in this market, and there's a limit to how much we can diversify outside the local market.
Okay, so let's talk about what may concern you in 2023. 2022, as I mentioned, we still saw a lot more cash pour into those RSA accounts over the course of the year, but they've got to be invested right. And what do you make of the investment climate right now?
Yeah, so I guess the first thing to say is that the contributions have been strong. We've got an average growth of about 15% annually over the last 5 years. And that's good news because we're adding more people to jobs. Last year, about 330 odd new contributors came in. And, so that was a huge chunk of the growth. Another chunk of the growth was the coupons and the interest on fixed income and dividends on equities. So yes, the growth is there. The challenge now is where to invest. And I think is in two buckets, which is the traditional investments, which is the fixed income equities, and the alternative investments, which is infrastructure, private equity, real estate, and things like that. So those two buckets will always continue to be there. The traditional markets will, in the short term, have a larger chunk, but there's a switch towards alternative, and we can see that year on year, even if slightly, but then it's ticking up a bit more into the alternatives. So it's really just engaging the markets and trying to find those diamond in the rough investment that's number one, can continue to grow the fund, and number two, continue to maintain that safety. So those twin aspects we also continue to need to do.
Right. I don't expect you to speak for investment managers at pension fund managers right now, but what's your assessment of the equities markets? Because I think many have had hoped that more pension funds would pour into that market. What's your view on why we haven't seen that? Is this just simply a case of the yields on the fixed income side are just too good? Or do you think that there are perhaps some concerns around equities?
I don't think the concerns about equity, but it's a bit of both. So the yields in the fixed income are high, but also the equity markets is a reflection of the economy. The economy hasn't done well over the years, and the investments of pension funds has reflected that. Second thing is that because pension funds are highly regulated, there are certain stocks that we can invest in. I mean, some fund managers will tell you, you can count on two fingers how many stocks out of the 150 plus stocks are on the Nigerian Stock Exchange that the pension funds can invest. So even though there are a number of companies quoted, we can't invest because you have to have paid dividend over a while, you have to have made profit over a while. And it does make sense from a regulatory point of view because if you're going to be investing pension funds and people's savings and retirement, those stocks have to be strong. So I guess it's limited universe even in the equity markets. It's a case of the fixed income market is strong, and it's also a case of the equities market being a reflection of the general economy, which has not been strong the last couple of years.
But in terms of product development, what do you see in 2023 in terms of the offering that may be different for pension funds to invest in? Do you anticipate, you were mentioning, for example, the alternative assets class as one that we've seen investments tick up slightly over the years. Mm-hmm. How do you see things evolving in terms of the products that may be available?
Yeah, so we're not just anticipating, we're also working with the market. So we're engaging with the various exchanges, we're engaging with issuers, we're engaging with local and international partners on potential structures and potential investments for the pension funds. And that engagement is ongoing. We're always engaging, always seeking various partners to see how we can structure, how we can engage, how we can engage in knowledge sharing, because sometimes the issues are various. Sometimes it's just understanding the product. Sometimes it's a case of the risk profile doesn't fit, so how can we mitigate the risk? So we're engaging with a number of DFIs, like I said, the exchanges and issuers. It's a constant engagement, but we're not just anticipating, we're also working towards ensuring that we can diversify those assets.
And in that context, I wanted you to speak very briefly towards infrastructure investments. It does seem like a no-brainer that investment in power infrastructure should be a good investment class if it's structured properly. Do you anticipate a lot more offerings in that space?
Yeah, on paper it should, but it will depend on the issuer, it will depend on the structure, and it will depend on the risk profile of the pension fund. Like I always say, there are about 20 plus pension funds in Nigeria, and all those pension funds have their own risk profile investment strategy, so it depends on those individuals. Right. That's the first thing. But it's one way that we need to get involved in, and we've seen a number of infrastructure funds and infrastructure bonds which the pension funds have gotten involved with a couple of risk mitigants that have been used. So some strategies that have been used really, right. and we'll see more of that, and people trying to come up with either covering the bonds and adding guarantees. So those have helped to increase investment in infrastructure.
Right. Okay, let's leave it there. Thank you so much for joining us today. Oguche Agoda is the CEO of the Pension Funds Operators Association of Nigeria.